Hi, it's Dave. Welcome to episode 239. Today, we've got a special episode. I'm joined with Emmet Peppers. How's it going,
Hey
Emmet?
guys, hey Dave.
Good, good. So we have a live stream going on for this episode, and lots of crazy things are happening the past few days. And we wanted to open up and share kind of a synopsis of what's going on, but also share some of our ideas. And first off, a lot of you guys probably might know a lot more than us. I mean, we're just like when there's something happening so fast, it's hard for people to catch up unless you're really really into it. And so a lot of people who are watching might be actually more knowledgeable than us in different areas. And that said, also we're not necessarily experts in everything we're talking about. Like there's a lot of things I just don't know much about. And even though Emmett, I'm sure you've worked in the industry a bit and you've seen things, but still, you probably have some limited knowledge, in different ways.
Yeah.
So that's where we're coming from. And none of this is going to be investment advice telling you to buy something or sell something anyway. It's going to be two guys who are friends and who are chatting and trying to
That's
figure
right.
out things. And we're going to try to, share our thoughts, but also hear from you guys. So here's the format of this live stream. We'll first go through a summary of how we're seeing, or the major things that have happened so far to date. So we can all be on the same page. And then we're going to hit a bunch of questions that we got from Twitter from different angles, trying to analyze, what's going on, who's responsible for what, trying to make sense of all this mess. And then we might even take some video questions. We might invite some people, you guys on, to join us and to ask some questions or to share what you're thinking about. So let's go ahead and first kind of deep pack and unpack some of this stuff, what's happened this past week. So I listed a few things here, so you can jump in anytime, Emmett, whenever you feel
Okay.
like.
Sure.
So here's the story. Melvin Capital and Citron, they're both, I mean, Citron, especially with their short selling, but Melvin Capital has billions of dollars in assets, and other hedge funds. They short GameStop, ticker GME. And it goes down earlier this year from $20 to $3. And they're pretty much counting on this company going bankrupt. They think it's an old school company, it has no future, and they're just gonna, write it all the way down. In this process over the summer, there's this guy on Twitter, on Reddit, Deep F Value, and he has a YouTube channel, Roaring Kitty. I'm trying to get him on my channel to
That'd
share
be
more of
amazing to get him on.
share
Yeah,
his
I'd love
story.
to have him. Yeah.
But he analyzes this thing and goes, hey, they're trying to reboot into e-commerce. They've got this new board member. They're trying to revamp stuff and they're undervalued for their business. And so he starts to buy some leaps, some call options, spends 50,000 bucks or so on it. And then a few months later, Michael Burry, he goes long, the guy who was featured on the Big Short movie. And the stock starts to shoot up and it goes up to about 40 bucks. And these short funds start to double down. And as all this stuff is happening, the short interest is growing and it gets up to 138%, right, of the
Crazy.
float, which is insane, right? There's more shorts out there than the actual, legitimate
Shares.
long
Yeah.
shares. And the funds during this whole time, they're desperate and they use different things. They try to use media and different stuff to try to, get their message out, try to cover, but they're getting burned. And Citadel, which is a major market maker, they're huge in the market. They bail out Melvin to the tune of a few $billions. And what's fascinating is Citadel also is one of the main kind of customers or revenue providers for Robinhood. So what happens is Robinhood, they sell their order flow to Citadel and probably a couple other places, but I think Citadel is one of their main guys. And 2 years ago, Bloomberg reported that they get 40% of the revenue, Robinhood, from Citadel and one other place. But that allows Citadel to front run orders. So if you order through Robinhood, basically Citadel gets to take that order and they make money. They basically buy something cheaper, sell it to you more expensive.
Yeah, it's all done in microseconds. The human eye can't really tell, but anyone who's probably had a Robinhood account or a Ameritrade account or Schwab or Fidelity, even I think they all route to Citadel as their top market maker. They route their custom order flow through. If you Google their SEC 606 reports, that's where it's disclosed. But basically, when you put your buy order in, if it's a market order, you could probably imagine the ways the order gets screwed with. But when people think like, oh, a limit order, they can't mess with my limit order to buy this limit price if it comes down to my limit price. But in reality, you're given your limit order to buy, let's say you're trying to buy Tesla at $800 even. Well, if the market comes down to touch $800 and then goes back up, you're not getting the fill because the high frequency trader is using that as a free option for them, because what they're doing is they're trying to buy at $800 and a penny or two, and then sell it at $800.03 for a quick 1 penny profit over and over. And if they don't do it, they'll sell, if it goes down below 800, $7.99, then they'll sell it to the $800 your broker gave to them as an order, basically. So you'll get the last fill at that $800 limit price, for example. So that's just an example. Most of the time it doesn't affect you, but once in a while you could really miss out on a low price of the day, for example, if you don't end up chasing it with higher limit prices. Mm-hmm. Anyway, sorry.
No, that's awesome. I mean, I know over the years you've been kind of critical of Robinhood because of that. Kind of, they're not giving people the best deals with their trades because they're selling their order flow. And I don't know how transparent Robinhood is really being about that. It's like,
I think they're forced to be transparent. There's lawsuit. All these brokers have, in the end, they're forced to be somewhat transparent. But yeah, I mean, they try to hide it as best they can.
Yeah. And so there's also the side where Robinhood supposedly sells data and more information, where some of these funds may be able to use that data to take advantage of where buyers are accumulating positions, so they can kind of, not just front run pennies, but actually buy positions ahead of time. I mean, there's a lot of, and I think this is part of the issues, is that there's a lot of opaqueness. It's not all
smoke and mirrors, like
exactly.
How these brokers are making money off of us.
Yeah, exactly. And what's also the bigger part is like Robinhood portrays themselves as this Robinhood figure for the individual investor, democratizing investing, but their customer really is, these market makers, and it's not completely what it might seem for people.
People that sign up for Robinhood, they're really the product of Robinhood, I would say. Similar how we're like the product of free, media that we read, through advertising is the customer, and we're the product, just the ones that click on the stuff, and I feel like it's similar with a lot of these online brokers now.
Mm-hmm. And what ends up happening in this situation is this morning Robinhood decided to stop buying of new positions in GME, GameStop, and AMC, and some other stocks. And that just shook the whole internet, the whole investing world, because it was seen as Robinhood taking a position against the retail investors, against those who are, on this other side of the trade. And it seemed like Robinhood was taking the side of the hedge funds and those who are short, trying to give them relief. And this just backfired, completely blew up on Robinhood. The CEO came on CNBC. I don't know if you watched that this evening.
I didn't see Vlad. Vlad. I didn't see his interview. I didn't get a chance.
Yeah, it was. He didn't, in my opinion, really present a strong case. It was very vague and just, I don't know. And then he tweeted this vague thing, and it was a blog post after market or in the late afternoon. And it didn't really say much. It said, okay, fine, we have SEC, net capital requirements and blah, 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 blah. But it wasn't a very, in my opinion, compelling thing. And it was so late, too. It was almost after the fact. Like, why couldn't they do something in the morning? Like, how much does it take for you just to write a few tweets and say, hey, this is what's happening, and we're not, trying to take sides, per se, and we're for you guys. And what does it take? Just take a couple tweets, It's like,
They're just so I feel like what he said, he was probably very well coached, had to be very prepared not to say the wrong thing, not to say something that could be interpreted in a way that could bring a lawsuit, all that stuff, especially when you don't, the founder of Robinhood, how much of Robinhood does he even own, at this point? I don't know. It's not like he owns the company, and he's kind of working for the stakeholders, the venture capital firms, and so he has to be very careful on how he treads this.
Yeah.
So yeah, it's tricky for him
Yeah.
probably.
So different brokerages are on and off today. Apex Clearing, which is a clearinghouse for several brokerages, they were off, and then they got on with some of these stocks. Interactive Brokers was a major brokerage that joined Robinhood and said, "Hey, we're not going to allow buying of new positions." And there was an interview of the founder,
Yeah.
and so I want to talk about that in a bit. But
Sure.
And I want to hear your opinions because I know you've worked at Interactive Brokers for many years. But let's finish kind of the scenario. So Robinhood bans, Interactive Broker bans, and supposedly the stock crashes in midday to like low hundreds now, and it goes back up to 300. It's just like insane. I don't know where this is headed.
It was almost at 500 at one point.
Yeah, exactly.
I saw a chart. Yeah.
And tomorrow, who knows what's going to happen.
After market, it was like 300 and something.
Yeah.
Crazy.
Yeah, it's crazy. And there's a whole nother side to this story that I think is important to understand. And I caught on to the story pretty late because I was initially looking at the stock price movements and just looking at it as a short squeeze. And I caught this on late, but I had some Twitter followers who kind of gave me pushback, and I was like, okay, I DM'd them, had some private conversations, and I'm like, oh, okay, I'm starting to get what's going on. So there's this other kind of background, and it's the whole 2008 financial crisis. And this plays a major, major role in this storyline. And the story is that during this crisis, the 2008 crisis that a lot of us remember very well, a lot of people suffered, a lot of kids and teenagers saw their parents suffer, their houses being foreclosed on, getting kicked out, electricity turning off, all this stuff. But then they saw big firms and Wall Street getting bailed out to the tune of billions, and it didn't make sense. They saw their families suffer, and there's a lot of stuff going on. I was reading a bunch of Reddit posts, some people seeing even people they know committing suicide, all this stuff. Right. And there's so much injustice. There's this sense of the system is rigged. That the 2008 financial crisis showed that, the government, big money, would bail out, the rich or, the big money, but they wouldn't bail out or help the suffering families. And this sense of corruption and injustice that a lot of this, let's say, people who were quite young during 2008, now it's fast forward 13 years. And they're older, they're starting to have jobs, they're starting to have some money to invest. And they see this whole scenario of shorting. And I want your perspective on this too, because you've seen this over the years, and we've seen this over the years with Tesla too.
Oh, yeah.
You've got this mechanism in Wall Street where you can short a company and you can continue to short the company. And you can combine that power of shorting with media attacks and kind of a whole network of, it's a machine that you can create, and it can be very well oiled, where you control the media in some senses, or you influence it very heavily, and you drive down the stock price. You've got your whole network of Wall Street guys doing this together, and the whole mood around a stock is so poor, and this company is already having a hard time. Now their odds of survival just go down drastically. And when people saw this happening to GameStop, what happened was some of these people, they're like, hey, I grew up with GameStop. I went to GameStop, every week for new games and all this stuff. And now Wall Street, these hedge funds want to kill it. Let's give GameStop a fighting chance, at least, Why kill it just because you want to make some money off of the short? And so that's where Wall Street Bets Reddit community got behind GameStop, said, hey, this is wrong. It reminded them so much of the whole corruption, injustice, and a lot of just pain in the past. And they're like, hey, this is wrong, and we're going to get behind GameStop, and we're going to try to stick it to the funds that are trying to profit off of this. And that's kind of the background, I think, of what's happening overall. I mean, do you have any other kind of things I'm missing out, you think?
Yeah, I mean, I think most people watching probably understand what shorting is, but just to go over, like if you own 1,000 shares of GameStop and you own it with your brokerage account, Robinhood, then Robinhood, and let's say you own it on margin, then Robinhood has the ability to lend out your shares without even telling you because they're helping to finance your position, for example. And so let's say I come along and Robinhood's going to go down. I want to sell it. I want to short it. So I want to sell it now and promise to buy back later at what I think will be a lower price. So I can go to borrow the shares from Robinhood, for example, to sell the shares now, like your 1,000 shares or 500 of your 1,000 shares to sell the shares now. I promise I have to buy them back later, and hopefully in my case at a lower price. And so when I sell those 500 shares I borrowed from you, whoever bought them from me, maybe they're buying them on margin and then their shares get lent out as well. And that could keep going on. That's how the percent float could be. That's how more than 100% of the shares in float could be shorted ultimately too. It's kind of crazy. Mm-hmm. But yeah, I just wanted to explain that mechanics as well.
Yeah. So, I mean, is it basically the shares are shorted multiple times, the same shares?
Yeah,
basically, right?
It has to get unwound eventually, and now this is being unwound, and this is what happens, I guess. You know, if the stock goes bankrupt, then it never gets unwound. They just all go to zero, and all the shorts, celebrate. But yeah.
I mean, one of the questions that I've been hearing from lots of people is, hey, I mean, there's a couple questions. Like, there's a general question of, should short selling be illegal in itself, right? Mm-hmm. And Elon Musk, he chimed in today, basically saying, hey, make short selling illegal. Because, I mean, Tesla, man, they were at the brink a lot of times because they were under immense pressure.
I think that was really crazy times with Tesla. At the same time, I'm thankful to all the shorts now because they redistributed much of their wealth to us, right? So all of us Tesla longs, a lot of our wealth is a result of these short sellers who lost, I don't know, like 30 or 40 billion dollars to all of us in sum, right? So if there was no shorting, we still would have made money with Tesla, and maybe Tesla would be even higher than where it is now. Who knows? Because there'd be no shorts, but it wouldn't have been as adventurous of a ride, that's for sure, for us. But yeah, I mean, once in a while, it seems like whether it's Enron or Lucky Coffee, the shorts, they provide a good service, and kind of exposing companies that are a sham or, a fraud, but it seems more times than not, they're just sort of ganging up on these companies that are weak, and maybe the companies are on their way down to bankruptcy eventually, but maybe they just the shorts kind of expedite that, or maybe they're not. And then the shorts, like GameStop, maybe they weren't. And maybe the shorts just suffocated them from the ability to raise more capital, which would have led to bankruptcy versus if they were still at $15 or $20 a share. Mm-hmm. So it's hard to know, but yeah, and then the philosophical question I think that's interesting is, okay, if you ban shorts, if you make it illegal, then what about put options? Are you going to make options? And then if you make put options illegal, are you going to make call options illegal too? Like maybe all options should be illegal. I don't know. Like, that maybe that makes the market too crazy too. Maybe we should simplify it to just buying and owning stocks or not, Mm-hmm. I don't know. What do you think about that?
Yeah, I mean, it is a kind of a slippery slope because in some ways you want the market to be the market. You want people to be able to trade what they want to trade. And if there's a buyer for your product, you want to be able to provide that. And there's something powerful about the market mechanisms because it's when you have a free market and it's liquid, there's a few things. First, there's so much money going back and forth. Like just one trading day of a major stock, there's so much stuff happening that that in effect is a huge benefit where it gives stability, where it's hard for a single player to manipulate the stock because the mass is so great. And I think that's part of the free market is if you can do it in the right way, that provides protection and stability for everyone involved, right? And so you don't want to, I think, mess and distort the market too much where you lose out on that. There's something I think immensely just awesome about the market. And another thing is the market is self-correcting in some ways. Like it is constantly adapting, and once it sees something, there's a good likelihood it's going to adapt and change. And so, for example, Melvin Capital and shorting, GameStop 130%. what's going to happen next, right? So people need to realize, hey, there are people like Melvin Capital and all these guys have accounts at these places who allow certain types of leverage, and who knows what type of leverage. It could be 10 to 1 or even greater. I don't know what they're doing, because they see the risks is not that great, because they go, hey, they've got other long positions, etc. But through this type of experience, these firms are going to be able to reevaluate and say, hey, you have to have better, more capital. You can't take this much leverage on certain positions. And so it's going to adjust in itself, right? The market in itself.
What has to happen, I think, is the regulators do have to step in to make adjustments to impose upon the big prime brokers, because these big prime brokers, they're working on quarterly earnings, right? And they have their golden parachute, the senior decision makers there almost no matter what, but they want to maximize their earnings to maximize their own golden parachutes or whatever you want to call it. But then you have the salespeople at these bigger prime brokers, and they're incentivized to attract clients to draw on the most revenue. And so they're going to push back as much as those two decision makers or those two incentive models of the players at these prime brokers are not to not to impose tighter restrictions. Even if their whole firm is at risk on one of these, I call them white swan events, because they're not unexpected. We expect a short squeeze from time to time, but they're just so rare, So, they just don't expect it to happen while they're there or during their tenure. They just look past it and they're like, I just want to make a lot of money this year. That's probably not going to happen. Let's just, so you sort of need the regulators to step in, I think, and impose tighter restrictions. Or for the regulators to step in, you need kind of Congress to do something. And I think Congress is going to maybe call a bunch of players on this into hearings and hopefully make some improvements. It's, no one likes more regulation, right? But sometimes in the markets, it's like free markets are great, but when you have these systemic potential risks that erupt, which we can talk about in a minute, then you need to do something to kind of correct. Like the market can correct in some ways, but also you need the market participants to be corrected by the people in control of the rules a little bit.
Mm-hmm. Yeah, definitely. So let's go into some questions here from some Twitter folks. So KG says, how do you think this will impact hedge shorting moving forward? Do you think this will reduce the popularity in publicly shorting stocks with Wall Street bets trailing these moves?
Yeah, I mean, I think a lot of funds are going to be reluctant to maintain short positions on maybe small cap stocks, especially small cap stocks that have high short percentages, of their float, because they know it's more susceptible to like a Wall Street bets attack or whatever you want to call it, So I think you'll see some kind of hesitancy, or maybe some of them already closing out some of those positions, hence all these stocks going up, the last couple of days. But also, I think the other strategy that's widely employed is these some long short hedge funds. I think it's a more noble strategy where you short the index, you short the whole S&P 500, but you go long a bunch of names that you think are better off in the index, so that you're trying to make alpha based on those names you like going up more than the rest of the index going up. So I don't know. There's lots of ways to play the long short equity hedge fund strategy, I guess, but there will be adjustments, I think.
Mm-hmm. Mm-hmm. So let's talk about, okay, so here's a question from Chris Guthrie. What do you think of Interactive Brokers doing the same thing as Robinhood today? And let's group a couple of these questions. What's the role of clearinghouses? And another question from Vincent. What will Robinhood need to take any legal responsibility with the radical action today? So yeah, what are your thoughts on Interactive Brokers? And maybe you can actually before that, can you explain like the dynamics of an infinity squeeze? Kind of what happens? Why is there such a drastic possibility for certain stocks to double, triple, 5 to even 10x in a very short period of time if they're heavily shorted, let's say over 100%? Like what happens to make that, the price go up?
Yeah, I mean, my opinion is like a lot of these stocks are artificially suppressed, I guess you could say, by the shorts already. Like maybe GameStop should have been at $50 this whole time, and now it's artificially higher, but
Hmm.
who knows where it would have been if there was no shorts allowed, right? But when these shorts are shorting the stock, they're creating more shares in the marketplace that, they have to eventually buy back in. But what if all the people buying the shares have no intention of selling, right? What if they all, just like Tesla, for example, want to buy and hold until it hits the trillion plus market cap, then the shorts are going to be like playing musical chairs, really scrambling to find buyers find, sellers who they can buy their shares back from.
Hmm.
So I think that's sort of what this infinity squeeze thing is, when there's just a complete mismatch of supply and demand on the actual stock, just economics 101, if the price doesn't go to zero, if the company's not getting bankrupt, then the shorts, they have to buy their shares back, right? And so there has to be an equal amount of sellers if they want to buy them back. Otherwise, it's just going to otherwise the price could just go to infinity.
Hmm. Yeah, it's like this is
Theoretically.
yeah, yeah. This is, I mean, the famous squeeze showed to show this was kind of the VW squeeze back in the day, where there's just
Yeah.
not enough shares.
Yeah.
Yeah, people don't want to
Ferrari
sell.
stuff
Yeah,
and all that. Yeah.
yeah,
I saw charts of that. I wasn't, paying attention at that time, but I've read about it and seen the charts and stuff.
yeah, yeah. All right, so let's go to Interactive Brokers. So Interactive Brokers, major brokerage, you've been a big fan,
Yeah.
worked there, you still, know a lot of people there. And I know you think very highly of the CEO. You know him very, very well. And he comes on CNBC and says, hey, we're shutting down, buying of these stocks because he thinks there's some threat to the market structure, right,
Yeah.
to the integrity of the market. And I kind of felt bad because the CNBC, I think, interviewer didn't let him just explain everything. I think you just, for a guy like him, just let him explain, what he needs to explain. But he's basically saying, hey, we have, as Interactive Brokers, as a brokerage, we have 5 billion in reserves. We think we'll be fine. But there are clearinghouses involved, and we don't know what their reserve situation is like. And if they can't get access to the other side, meaning if there are hedge funds who go belly up, or a lot of them who owe billions and they go bankrupt,
Yeah.
and these clearinghouses can't access any of those billions of dollars, these clearinghouses, they have a certain amount of reserve they use, and
Yeah.
if all of that gets taken up and then they're negative, they're not going to be able to clear trades anymore. And so you're going to
Yeah.
have a huge disruption in the market. A lot of brokerages use clearinghouses. There's some that have their own clearinghouse, but still, this would be a huge jolt in the market. And that's what I mean. Correct me if I'm wrong, but that's kind of seems
Yeah.
like Interactive Brokers CEO was saying, "Hey, this is a bigger issue, and this is why we're taking these steps."
Yeah. Yeah. So there's like the OCC, the options clearinghouse. There's also the NSCC and DTC, that sort of the clearinghouse for stocks, and they have their reserves, and Robinhood, Ameritrade, everyone, all these firms that are self-clearing. Apex is a clearing firm, but they have front end brokers using their clearing systems but Apex has to deposit collateral with the OCC and NSCC for the stock they hold there and stuff, and the options, and these clearinghouses, OCC and NSC, are raising, due to the volatility, they're raising their requirements, and I think the CEO of Interactive Brokers, saw this squeeze happening, and who's to say this is the end of it or the beginning of it, right? What if it went up to $20,000 a share? I mean, you don't know, and so he's doing what he can to kind of calm it down and say, okay, we're going to put all our customers in closing only, or liquidation only, which just means like if you were short the GameStop, you couldn't short more. You can only buy your shares back to close your position. If you're long GameStop, you can't buy more. You can only close your GameStop shares that you own if you want, when and if you want. They're not forcing you to close your position, but they're saying the only transaction you can do is a transaction that closes your position. So he's just trying to temper it down because he sees a systemic risk I don't know, systemic or endemic or whatever you want to call it, but he sees a major risk in this structure where brokers with much less capital, I think Interactive Brokers has close to 10 billion of equity capital on their balance sheet, and keep in mind 80% of that is, or 75% of that is his, because he owns 75% of the company, right? So, but he sees how much equity capital does Robinhood have? I don't even know, but it's I would doubt it's over $1 billion. It's probably much less, probably in the hundreds of millions or something. I don't know, but Robinhood, he would kind of imply, he was on a Bloomberg interview that was longer, it was a little more detailed, but what I got is like, if some of these brokers, whether it's Robinhood or whoever, is not able to deliver to their clients who they owe money to, they have to, but then Robinhood then goes belly up, right, and goes bankrupt, and half the customers that are owed money on GameStop are not getting their pay, right? And so all of a sudden there's a huge panic in the markets probably, and the whole market and system starts crashing, and it just could be a big problem, So I think he's trying to kind of curtail that possibility, in my opinion. It's like the lesser of two evils is the way I think of it for what he might be thinking. Like, sure, he wants free markets, of course, but he sees a much big, he has much more information than I do, or you do, or anyone on Twitter that is commenting probably. He has a lot more information on all the market participants and the clearinghouses and all that's going, and I think he just picked the lesser of two evils and was like, we got to prevent this potential major market calamity from happening. It would be terrible if such a thing happened, where a bunch of small brokerage firms went bankrupt at once and shut down, and clients couldn't get all their money out.
Mm-hmm. Do you think he's like, do you think he would be, I mean, I don't want to put you on the spot because I know, you still use Interactive Brokers and rely on them. But do you think, in a sense, we might not be able to fully understand or evaluate the decisions until later, but maybe we may never be able to, because we don't have all the information. But would you say that he's being cautious? He's being conservative, and even if there's a 5 or 10% or 20% chance that that's a big risk in his opinion because of the ramifications, right? To justify his actions.
He sees it as like, okay, who's, all the people who were long GameStop on this trade, they can get out if they want. He's not stopping them from trading. He's stopping all the new participants that want to get in with even more shares right now, I think there's a point to that. Like, people are upset. It's like restricting speech on Twitter or something. Now you're restricting what I can trade on a so-called free market system. So, it's not perfect. It's in theory, this shouldn't happen, but the market system we have isn't perfect. And maybe this will help bring about congressional hearings that creates regulatory changes that require better risk appropriation by all these smaller brokers, especially, that don't have as much wiggle room with their capital, and the clearinghouses potentially too. And maybe there should be, maybe short. I don't know about shorting being banned, because that brings up questions of banning put options and banning call options, and maybe, I don't know, but that brings up a lot more, I think, in my opinion. But maybe there needs to be controls on shorts, like maybe only 50% of a stock's float can be shorted or something. I don't know, but there should be something that doesn't allow for this type of, gray area manipulation. I know stock manipulation is quote unquote illegal, but like when you have a few shorts kind of like sharing ideas about a stock that they think is going down and they all short it together, that's gray area manipulation. The same way when you have, a Reddit board saying, let's band together and save GameStop, and screw the shorts. It's both, I think they're both two sides of the same sword, so it's tricky, but you need to kind of figure out a way around it without disrupting the whole system, I think. Mm-hmm. What do you think?
Yeah, this is a tough one because I think it's moving so fast and there's so much information, but it's to understand what's going on. It really, the people who are really into the Reddit forums and the Discord servers and all that stuff have an advantage. Yeah. And a lot of traditional investors in finance are not that type of person to be, in Reddit and Discord all day. And because of that, they're not going to be up to speed on what's going on. And so
That's true
they're
too.
going to make some decisions not really understanding who's behind that. And the assumption would be, it's just a band of, crazy retail investors, mobbing together on the internet to, crush some fund and, do a short squeeze. And I'm not going to say that's one angle, but I think there's such a bigger movement, and I think there's some level of, we do need to, there's some level of, we do need to let it play out. Let's let the market do what the market does, and this is probably one of the most powerful things we have is the dynamics and how the market is its own accountability, and it's and to go into it, and like, for example, we had Twitter, jumping in, Facebook and others jumping in, censoring, right, stuff and making their own decisions. And part of me is like, let the system do its job. Like, we have a legal system. Fine if the person is doing stuff illegal, and it's then let the system work rather than jumping the gun. And a lot of times I feel like jumping the gun is out of the fear of what might happen, and not out of the trust in the system, And I think with this situation, I think with Robinhood and with Interactive Brokers, I think without understanding the bigger background, which could be hard unless you're really in it, in the forums, you're going to maybe jump the gun and say, we need to stop this stuff. We don't like it. We don't want it. Rather than trust the system and say, if there are illegal stuff going on, then let the legal system deal with it. They will, hopefully, there'll be some repercussions. Let the market, most of all, deal with the winners and losers, and it'll play out. And I feel like that's where a lot of people have a lot of anger against what's happened today. It's like, just leave it alone. Let it play out. Why are you choosing sides? Not just choosing sides like buying or selling stock, but why are you restricting people from, opening positions? And that in effect is is taking a side, right? You're taking a side if you're killing the momentum if you restrict it. And so, I don't know, what are your thoughts with all of that?
Yeah, I mean, I think you're right. There's a lot of angles to look at this. There's not just one lens. You got to look at it from multiple sides, right? On one side, free markets, let the market work itself out on this, right? But on the other side, what if it keeps going where Robinhood gets shut down and millions of customers can't get access to their money or can't get paid? Is the government going to bail out Robinhood? I don't know, but it's just, so there's multiple sides and angles, and who's to say GameStop isn't worth? I mean, people are like so crazy about the number of the stock price, like, $300, $500 a share. Oh my gosh, people are going crazy. But really, that's like a 15 or 20 or 25 billion market cap when you look at it. And we're talking about a Tesla at 800 billion. You talk about QuantumScape, which doesn't have anything, that's 50 or 40 billion. It's like GameStop, who's to say they're not going to reinvent their business model, and they don't have something up their sleeve to create a huge e-commerce, business. The guy from Chewy, who made that big business, he came on the board and bought got a huge position. So he's doing some stuff there, on GameStop to try to change the business model, I think, or that's what I've heard. And so who's to say what the valuation should be? Why maybe this short's artificially suppressed it to less than $1 billion or whatever it was, and it should have been at 10 billion all this time, or it's who's going to judge that, right? It's similar to the speech thing on Twitter or whatever. Who's going to judge what speech should be allowed and what shouldn't be allowed? You got to let the market judge that, I think, and it will judge it in the end. Even if it goes up to 50 billion of a market cap, and it turns out that GameStop's going to go bankrupt, it will eventually go to zero again, and just let it happen, let the market do it. But because there is the risk of of some of these smaller brokers, having capital calls. And I heard Robinhood tapped a big line of credit earlier today, maybe $100 million. I don't know. I saw some headlines about that. So there's crumbs of that story, that of course they would keep it under wraps as much as possible until the last second, like Lehman did, but what if Robinhood was about to collapse, and Interactive Brokers saved them, all people, who knows, like that seems like a realistic possibility that could have been playing out, and that would be, I think, arguably worse of a outcome than what's happening right now.
Yeah. Do you think Robinhood can recover from this?
No. I think they're going to lose a ton of reputational risk. I think there'll be tons of articles written about this that are already probably in the works, interviews. You have some employees probably defecting, giving out details of how this went down and how the company is not, capable for the business it's doing. It's just going to have a huge black eye that it's going to be hard to recover from. They don't have anything that's not reproducible, in my opinion. They had their brand. They'll still have some customer base. Some people will be too lazy to move or don't care about this maybe, but I think they'll lose a huge segment of clients, and they're probably going to get hurt on their IPO, for example, and they won't be valued as much themselves.
Mm-hmm. Yeah. I think there's a slight, I agree. Robin, I think the thing that they're digging their own grave because of their poor communication, and it's out of respect for their users to walk with them together and say, hey, before market open, here's the situation.
I think this goes back to their users are not their clients.
Got it.
Their clients is Citadel, Two Sigma, these firms that they sell order flow to. The users are sort of the product that they have to pretend are the client, And so anyway, go on with what you're saying.
Yeah. So, it's this whole thing where, have some empathy with your customer, at least with your so-called account holders.
Your product.
Your product. And tell them, what's going on. Be transparent. That's what people want. They just want to know what's going on for real. Like, skip the lingo, skip your terminology, skip the vagueness, and just lay it out, and do it before, like early on. And what Robinhood is doing is like doing it late and then being vague. And I can't even understand what the guy's saying. Like the CEO is like, what are you saying? Tell us, It's like, and every time they're just digging their grave. It's like, it's crazy. I'm watching this amazing story of what Robin has become, and I'm just watching them digging like the grave deeper and deeper, with each move that they do. And I'm like, oh my gosh, it's definitely a painful thing to watch.
Painful.
Here's a question about information. So Fermi's Parasox on Twitter says, do you think this is all a part of the end of gatekeepers and asymmetric information? You have these entrenched interests who see their role eroding, and they are fighting back against progress.
Yeah, I think that's a little too dystopic, I guess, or a little too conspiracy thinking. There's some truth in it a little bit, in that, so-called rent seekers in this industry are very engraved on their businesses, and regulators, clearinghouses, brokerage firms that have been around for a long time, all this stuff. And a lot of this stuff, the system, the way it's built up is, it's very I think Nassim Taleb has a term for it, Lindy or whatever. It stands for the longer something's been in place, the harder it is to kind of disrupt and change or something, It's the Lindy principle. I forget what the Lindy stands for. It's like a longer term thing. But, I think these gatekeepers, like the brokers, to take them out of the equation would disrupt the entire system. And there's just too many stakeholders in the system the way it is for it to be completely pulled out of the roots and rebuilt from scratch. I think if anything, maybe you'll see some third world countries, evolving their market structure, to have like blockchain technology and kind of get rid of gatekeepers or brokers, get rid of a lot of this fluff that you don't need if you were going to build it from the ground up with today's technology, but because it's been there for so long and entrenched into the system, I don't think in the US markets it's going to change much in that respect.
Mm-hmm. Yeah.
What do you think?
Yeah. So I think, I mean, brokerages, I mean, it's a tough one. There's a system that's been working. I do have some thoughts on kind of what I think are bigger or longer term, bigger ramifications of what's going on. So, I mean, I feel like there's some bigger trends happening that we're seeing, that this is kind of an example of what's happening. Like, for example, there's a democratization of information, whereas back in the day, like you had to be part of some privileged, network of group or company or something to get access.
So the gatekeepers of information are breaking down.
Exactly,
sure.
Right? So to learn about a new company, let's say 30 or 40 years ago, it's like, what do? So you don't have the internet. Like, how do you research without the internet? It's like, it's like crazy. And in that sense, these, big firms, et cetera, they, were these gatekeepers of, the reports and the knowledge of which companies to invest in. And you think about it, 40 years is just a snap in history. So, I mean, it really has just completely disintegrated this whole notion that, these big firms and big money have a monopoly on information. Fast forward a blink of the eye, 40 years, we're in 2021, and now, we have access. And we might not have access to the same exact information, obviously. Like some of these firms, they are paying big money for data that we just don't have. It's interesting data. Like how many?
But
people
in some ways, we have more access to information, or we have, not that we have more, but we have the wherewithal. We have more information that they don't pay attention to, like forums or blogs of true user experiences and stuff and stuff like that. Yeah.
Yes, and the way I look at it is, big money has some type of. They have an advantage where they can buy data, and they can buy reports. They could buy, for example, how many people are walking in and out of certain stores, certain places, and make certain decisions. And there's stuff that retailers don't have access to. But then on the flip side, retailers are just people, individuals. They have so much access to everything out there.
Yeah.
And they've got hustle too, a lot of them.
And they can share the ideas with each other so much more easily now.
Exactly, right? Like the coming together of all this data and information. And so in some ways, there's a tipping point where the old guard and the way they had their researchers, their analysts, their paid data and all this stuff, there's a tipping point where that data has been eclipsed by the crowdsourced data of individuals outside
it's become stale. Their
exactly.
old model of data and information has become stale.
Yeah,
that's true.
And I don't really hear people talking about this much, but I think that tipping point has happened. I don't know exactly when. I think it's already happened, actually. Within the past maybe 2 or 3 years or something. That's my hunch. In the past 2 or 3 years, we've had a historic tipping point where the old guard information advantage is now eclipsed by the crowdsourced kind of data advantage of individual investors, powered by hustle and powered by the many sources of information pulled together at various sources like forums or different places, Reddit and Facebook groups and just chat groups, anything. And so you've got this shift, but people aren't picking it up. And the traditional investing world, they're still complacent in their, in their old guard. And
it's true.
And so you've got this massive shift. And I think that's part of the backdrop of GameStop and Wall Street Bets. They're not alone. This is not an isolated incident. This is part of a bigger story. It's part of the bigger story where the advantage has shifted. And I'm not going to say that the old guard doesn't have certain advantages in certain ways, in certain fields, and certain types of investments and stuff like that. That's obvious.
Leverage,
exactly.
Better leverage or better margin rates or whatever. Yeah.
Exactly, especially in products that require complexity and all sorts of stuff. But there are certain things that I think retailers have now picked up on, where they're like, "Whoa, this game is actually available. We can actually jump into it." and use hustle and and
new
crowdsourcing.
tools,
Exactly, tools, bring it together, and it completely, I think, it's a huge advantage over, the old guard. I mean, we've been part of this, right, through our participation with, the Tesla Motors Forum Club, with Twitter and other places, where we've seen like the level and quality of research and insight just is incomparable. You can't compare it. It's just ridiculous.
Yeah, you look at then you occasionally get like these professional research reports from the investment banks passed around with some of us Forum Club members, and we read them and we're like, this guy knows a little bit of this, but he doesn't know anything about that, so we can pick them apart better than the information sources that, are given to the old guard, institutional investor type, I think, for sure, if you know it well,
Yeah, exactly. I remember I had a friend who was, forwarding me, all of Morgan Stanley's reports on Tesla over, many years. And I was just reading this stuff, and I'm like, wow, they really just aren't focused on the company. It's like, it's so evident they're covering, like 10 different auto companies, and they're just, Tesla's just one of them, and they don't even have that big of a team, and they're not really into it. Like, they're not really scouring the information and the data and, talking to owners and figuring out all the latest stuff. And it's so apparent that it's like, these guys don't have a data advantage. They have certain advantages where they can talk to management, and get some data and pay for data sources on supply chain analysis and how many parts are being shipped to the factory, all this sorts of stuff that maybe retailers don't have. But it's fascinating, this data shift. And I think when I look at this data shift, I'm like, wow, this is crazy. It's
like an information advantage shift.
Exactly. Yeah. But then here's the thing with investing: information is money. Information is the advantage, right? You don't need. That's the cool thing I love about investing. You don't need pedigree. You don't need position. You don't need education in terms of degree or whatever, right? I mean, you need education in terms of learning how to do stuff, but you don't need the recognition. You don't need any of that stuff. It's such a equalizer in some ways. If you go in it with hustle, with information, with some type of competitive edge you have, and that's what I think some of the retail or the individual investor world is starting to pick up on. They're going, hey, this is interesting, this field of investing. It's not this crazy thing that you can't do. It's something, look, research.
It's like when you wake up from reading the traditional financial media articles on stuff, when 10 years ago, I got, 10 plus years ago, I got all my information from whether it's the Wall Street Journal, Barron's, Bloomberg, CNBC. But over the last 10 years, I've evolved to get most of the information that I value from online forums and Twitter now, especially. And I totally value that 10 times more than any Wall Street Journal article from, or any of that, or interviews with the actual founders of companies, stuff like that are important. But the traditional sources of media that us retail folks used to follow, I think we're realizing is kind of garbage or bunk compared to crowdsourcing information like you're talking about.
Yeah. And it's interesting where this is headed. And that's where GameStop, Robinhood, Reddit, Wall Street Bets, all this stuff fits in the bigger picture to me is, okay, so we've got this shift of data where it's opened up now. Big money can't hold it in. And that's where I would say, I know there's a lot of anger and a lot of frustration and a lot of skepticism on the system, which I think is valid in a lot of ways. But I think there's a bigger movement here, and it's the opening up of information and data, which is the advantage. That's the key. The data and the information is the advantage. That's what the old guard has been holding on to, but they can't hold on to it anymore because the internet has disrupted everything. And that is going to open up huge possibilities for a whole new generation of people to get involved in investing. And they don't have to go through the old way of investing. It's a new way. And it's fascinating times for sure, I think.
It is. Yeah, no, I agree. It makes a lot of sense. Yeah. So I think from that point of view, the information advantage has totally shifted to lean more towards us retail folks that aren't traditional institutional investors.
Mm-hmm. Yeah, definitely. All right, so what we want to do here is I want to take the rest of the time on our live stream to actually invite some of you guys on our discussion. I think it'd be fun. If you have some kind of, I want to keep it actually. I mean, I know there's a ton of other topics we could cover with investing and stuff, but maybe we can kind of keep it on kind of some of the issues and things we've been talking about, so far. And what we're going to do is I'm going to tweet out a link. I just tweeted out, and it's a guest.ecam.live/97A4C6EC8. So it's a link on Twitter. I just tweeted out on my account, and you can join in, and I'll just plug you in. And if you are spewing spam about something, I'm going to move on. I'm just going to cut you off because we want legitimate, discussion, and contribution here. And so I'm going to go ahead and I'm going to add. We've got our first guest here, and so I'm super appreciative. He on Twitter he goes by Minya Business, and I reached out to him because I'm like, hey, I don't really understand the background of GameStop, and he helped me yesterday to really dive into Wall Street Bets, the Reddit. He summarized all the stuff. He's given me some links, and I'm like, hey, you wrote up an amazing thing. Just explain it to me, and it just clicked for me. So I wanted to bring him in here. Hey, how's it going?
Hey guys, how are you?
Hey, welcome. And you're coming from Australia, right?
Yeah. I'm from Australia. I haven't got much sleep over the last couple of days.
Okay, awesome. Hey, thank you for helping me out with kind of the research and the links. I appreciate it. And so, I wanted to actually have you on, and I took some notes here through when you reached out to me to explain stuff. And I wanted to actually see if you can help us understand some of the pent up kind of anger or frustration that might be driving some of the Wall Street Bets movement with GameStop. I'm going to read actually a couple quotes from a link that you sent me on Wall Street Bets on some people who are talking about the 2008 crisis. I thought kind of summarize some of the stuff. So here's a couple stories. I think they were worthwhile. Gnarly Dan says, I was a sophomore in high school when the crash happened in 2008. My mom lost her job, and I watched her go through her life savings to support our house. I was always wondering when our family was going to get help, and the help never came. To add insult to injury, I saw Wall Street get billion-dollar bailouts and spin the story on poor people. This is the first time in 30 years of my life I've ever seen the Wall Street feel the same pain and worry my mother felt. I'm all in tomorrow. The same children they robbed 13 years ago grew up, and we now have money ourselves. I thought that was poignant. Another Reddit poster says, in September 2008, I firsthand saw the body bags of a man that jumped in front of a train. Hedge funds have literally taken lives through their greed. It's time for some long overdue taste of their own medicine. Another poster said, the 2008 recession collapsed my family. 6 boys, parents with no college and no credit, went so far into poverty that my parents will never climb out. Banks don't touch them with a 10-foot pole. They hit rock bottom, and that's how I grew up. I'm doing great after climbing out of the lower class, but my younger brothers still have a mountain climb to get out of that dark shadow. And one last story is, I'm right there with you guys. In high school, my family lost everything in 2008. The gas went out, the electricity went out because my parents couldn't pay the bills. I remember sitting at the library all day with my laptop, using their Wi-Fi to do homework. When the library closed, they had to kick everyone out. I would sit outside in the cement at a light post and plug in my laptop into an outdoor outlet to continue to use their Wi-Fi, and all in the while getting eaten alive by mosquitoes. It's just a lot of stuff that I think people are feeling kind of this deep connection to this greater injustice and a greater kind of corruption, where some people are privileged and are in positions of power. And a lot of the struggling people just, out there aren't getting the same type of access, right? And the same bailouts or privilege. So help us out. Like, what can you tell us to help us understand kind of, what's going on?
Yeah, I mean that's a big load of wait. I think I have that echo. You guys hear that? Ravi?
Yeah.
Just wait.
Okay, now you're on. Go ahead. Yeah, I had a double thing. Go ahead.
Yeah, is that all good? Okay, but now I can't hear my. Okay. Yeah. Okay. Good. Yeah. That's like a loaded thing. Like if you go through Reddit and everything, you see some of these stories, and it is really really sad. Like you go through like I even told you like I know not personally really anymore, but like I know people that have committed suicide because of that 2008 crisis and everything. It's so sad. And like what happened after that? Like what happened after that? The banks, the hedge funds, all they did was ended up lining their pockets. And who was left holding the bag? It was us. It was the everyday person. It was the retail investor. And then we get into a situation that yes isn't exactly the same, but we get into a situation where now the shoe is on the other foot, where they overextended themselves. A lot of people said, you should have been more diligent. You should have, you should have invested, and looked into your company. You should have done, looked into the hedge funds, seeing what they were doing. But then when it comes back into the hedge funds, it's just like the rules are changed, and then they change midway, and that's what everyone's frustrated about. Like I can't remember exactly who it was, but someone, another hedge fund guy went on and said that GameStop isn't in trading on its fundamentals. Who are you to say that it's not trading on its fundamentals? Was it trading on its fundamentals when it was $2 a share, when everyone was hopping on and driving the stock? Are you telling me that the market cap was less than the free cash flow, and that's trading at fundamentals? Please. And now you're going to lock us out of, buying the stock or buying options. Like I know, Emmet, that you have, like you're got a lot with interactive brokers, but I was just so taken aback, just how bad it was. I'm up in the middle of the night, like thinking something's wrong with my connection or something, and I'm trying to put through orders, and I'm looking at the sheets, and I'm just locked out, and I'm like, so this is how we're being treated. This is the system, and I think that I'm just a very very small part in what I think is one of the greatest revolutions that will happen, probably in the last few centuries, because after 2008 nothing happened. But I think the freeness of the internet has really brought everyone together. They like saying that this is a targeted attack on hedge funds. Please, like, if anything, this is the most open and free, I don't know what to say, like the most open and free, like, exchange of information. We're on a forum that everyone can read. Everyone can make their own decisions. A short squeeze isn't illegal. Short interest is just as much of a technical indicator as PE ratio. Like if you overextend yourself 140% of the float and allegedly, naked short sell, like we don't know how, they got 140% of the float, but when it did go up, from, what was it, $4 to $40, and then it ended up, losing them something like 3, 4, 5 billion in the space of not, I don't know the exact time frame, but not a very long time frame. They just doubled down because they just thought that it didn't matter. So yeah, I don't know, like it's kind of, it's just coming from the average retail investor, it's frustrating. It is really the word to say. Sorry, I can't hear anything.
Yeah, definitely appreciate giving the insight. And yeah, it's a little bit laggy, but we'll see if we can continue. Thank you. Let's go to the next. Oh shoot, sorry, I just canceled the next guest. He was waiting. Oh my gosh, sorry, man. This is the first time I'm trying this. Like live new folks. But anyways, yeah, go ahead. Yeah, can you
Me?
Can you hear us?
Yeah. So I definitely identify with everything the last gentleman was talking about. What was his first name? Do you recall?
Minya business.
Minya.
Yeah.
So I definitely identify, and it's screwed up. Yeah, I mean, in the system that we've been sold, it's funny. As he was saying that, it reminded me a lot of the Twitter thing, and the argument was like, well, Twitter's a private company. Well, Interactive Brokers and Robinhood are companies themselves that, although they have regulations, they can, decide what stocks to not let clients buy if they think it's too risky, and you can go to another broker that allows it or something, so the same argument there, but it's still, in both cases, it just doesn't fly to me in terms of like freedom of speech and freedom of markets. Like, let people be who they want to be, like in terms of expressing what stocks they want to buy with all the tools that are there, and let people say what they want to say. And if, like you said, the system says something illegal about what I'm saying on Twitter or whatever, then the system will come after me, but I don't want my broker or my social media to tell me what I can or can't buy or what I can or can't say. It's just not a world I want to be in, with Big Brother kind of like becoming these corporations and stuff.
Yeah, definitely. Scott, welcome on.
Hey.
Thanks,
Dave.
Yeah.
Emmet, for having me.
Welcome.
Hi.
Yeah.
It's a little bit laggy on my end.
Okay, we can hear you.
But I was hoping
go
you
ahead.
could. Okay, cool. Thanks. So I wanted to know specifically for Dave if this has changed your conviction on some sort of decentralized application. I have followed your thoughts on Bitcoin, and I'm just curious if it has changed how you feel at all.
Yeah, I mean, so a couple things. I think what's not completely apparent, because I do have some skepticism on long-term, the relationship between government and crypto, but like I'm actually super passionate about personal liberties and about freedom, and it's one of the reasons why like I do what I do, and it really bothers me when there is injustice, or there is, I guess, it's not it is what's happening now, but it's also what's always there, and it's something that I've dedicated a good portion of my entire life to in my past, was to fight injustice. And so it's definitely huge to my heart. And regarding decentralization, I think there are a lot of building blocks that are just coming to shape, where there is growing information. Everyone can access, the information they choose. And in a sense, information is causing a decentralized world, in a sense, because we're no longer all in one funnel of information anymore. And so the question is, okay, how can we take this and use it for good? Like, how can we use decentralization for good? Because there's also another side where decentralization, I think, can have some negative impacts too. You could fragmentize and divide, entire countries where they just are fighting against each other. So we need to look at decentralization and say, how can we in a way optimize it for people's good? And this is a big question: is how can we do it for finances and investing? You know, and I'll be all for it if we can, you know, really dive into and find something. Crypto in a way is maybe a first application of that, but I'm so into like companies and products. I'm a real big believer in establishing new value innovation with that. I'm looking. I mean, I'd be, you know, super excited to see how we can find a decentralized investing avenue in companies who are changing the world. Fascinating topic though.
For sure. Hey, wanted to thank you guys. I've been following the channel for a while, so I'm stoked to get on tonight, and I'll continue to listen to the combo tonight and many more videos.
All right. Thanks, Scott. Appreciate your time. Yeah.
Thanks, Scott.
All right.
No problem.
All right. I know my software is kind of laggy. I'm doing kind of this weird thing. I'm using Skype with Emmet, but I'm using another piece of software to bring in guests. So, but I think the audio is good enough.
The audio is good.
Yeah. So, I mean, audio is awesome. We have Srijan coming in. Can you hear us?
Hey, Dave. Hey, Evan. How are you doing?
Hi.
Good.
How you doing?
Welcome.
Thank you. Yeah, the question I had for you guys was regarding like information flow, as you mentioned about once in your video about like research happening on YouTube. So I was just wondering, what are your thoughts on, like the amount of research that's happening among people on YouTube and how that could be taken advantage of, and how that can help retail investors?
Yeah, I would say, like Dave was saying earlier, there's definitely, and you're just saying in your question, is there's a huge change in the amount of information available to the retail investor. And, unfortunately, there's only, 14 hours or 15 hours in the day for me to be awake. And it's like a struggle just to find the most critical pieces of research to spend my time listening to or watching. I have so many other responsibilities. So it's really probably 3 to 5 hours for me, but maybe, more or less for other people. But it's, Dave, how do you figure out what the most valuable research to listen to is to get the most out of your time?
What I would say actually is, a lot of people probably can have some advantage over me and Emmet. And one of the reasons is because a lot of it is hunger. You need that hunger to say, I need this. I need to have an edge. I need to find this out. And, look at for some people who've made gains in the market, there is this sense where you kind of slack off a bit. You're not on the edge all the time. And that's where, I think I want to break the illusion that people who maybe have made great gains in the market, they somehow have a continuous advantage of knowledge or whatever information. They don't really. They might have learned some experiences and they might have some insights, but in terms of data and information and stuff, a lot of it is hustle and a lot of it is going after it. And if you recognize that you have the advantage because you have more desire and more hustle, that's going to take you all the way, I think. I mean, I really think that's the key, that most investors, they just don't research much. Most investors are just looking for the quick tip. They just read some article and they just want to buy something. If you understand that, then you're way ahead of the game right there. Yeah.
All right. And just quickly, what are your thoughts on Seeking Alpha, the website?
Yeah, I can take that. The Seeking Alpha I know pretty well. I think it's a mixed bag. There's a lot of people on there that are just pushing. It's kind of a hobbyist thing for a lot of managers to kind of write their articles and research. It's pretty much free to get on there, and you get almost pennies or something. If you're one of the most popular people, maybe you earn a little extra money, but other than that, it's just kind of a hobby for a lot of people. But you have a wide range of opinions. I've seen lots of crazy ideas on Tesla, both long and short, and and on other things. And occasionally there's a really good idea on there that I think, wow, that's good quality research, but it's like a diamond in the rough, but there are some good ideas on there, but there's also a lot of craziness in there. I don't know. What do you think, Dave?
Yeah, same thing. We go way back with Seeking Alpha because some of the craziest Tesla hit pieces were on Seeking Alpha.
Yeah.
And they really gathered a lot of fans. Like there were people who just had these enormous short theses on Tesla with like 30, 40, 50 articles. And It was just amazing. And it's amazing how logical they could seem, but it was just so, obviously wrong, but yet it convinced so many people. Fascinating stuff. But I mean, that's the thing when you research, you've got, it's so interesting how, the information can be so, so right or so wrong.
Yeah.
Right.
Yeah.
All right, guys. Thank you for
Okay. Thank you, Sharon. Take care.
Sure, thanks.
Right. We'll see you. Talk to you later. All right. We're going to take, we're only going to take, I think, 3 more callers. I think we did have a cutoff in about 10, 15 minutes. So I'm not going to take any more calls. So sorry for those who weren't able to get in, but we'll take Arjun, Market Scraper, and then Thea Chu as the last 3 callers. So let's go ahead. Arjun, what's up? How's it going?
Yeah. I got cut out. I wasn't sure. I just joined back in just in case.
Okay, cool.
Yeah, there was anything more to say.
Yeah. Is there anything else you wanted to say, actually?
Well, I actually would really like to hear some of your guys' opinions because it really surprised me, which is why I actually apologized when I sent you the message that I was a little bit, I suppose, taken aback that you shorted or you were on the opposite side of the retail investors because through your values and everything that something that I respect so much about you, and thank you for putting everything out so openly to help all of us, was that you took the opposite side, and it just it confused me. But then I realized that, like you said, or like I said, that the media really, I feel like, pushes something, and then you kind of just you take a quick glance and you're like, oh, it's not really anything. It's just a few people like having a little bit of a upcoming or whatever else. It'll be nothing. It's going to turn over. And and it surprised me because you go into detail so much. Obviously, I'm sure that you have a lot of other things to do than look at what's happening on Reddit. But it kind of just interested me, and that's why I wanted to really, I suppose, get on. Like, this is great because I feel like more people are going to hear the story. And even like on Instagram and stuff where I put it up, people are kind of just talking about the money, and I'm trying to, educate as many people as possible that it's really not about it. Not that it's not about the money. It's just that it seems that hedge funds really only listen when money is being taken away from them, because they didn't listen in 2008. And they've been doing it for a long time. So I would just like to hear your guys' opinions or views, or if you have any opposing views to what I said.
I mean, actually, no. I think I mean, you explained it great, and I appreciate it. Actually, when I reached out to you, you explained everything. Actually, what's interesting is the situation is moving so fast that I'm kind of sometimes a slow intaker. And so, for example, not yesterday, but the day before, I was actually researching like 3 or 4 hours on this one obscure company and this obscure field. And so I wasn't really into the whole Reddit, Wall Street. It's like I did like a quick round, but I didn't know that much. I just took it as it's a squeeze and a trade. I was like, okay, I'll just take it as a trade. So it wasn't until yesterday when I reached out to you and several others, and I said, hey, what's going on? What can you tell me? That's when you guys actually helped me to make everything click. And that's, and I think that's part of the awesome power of community. And that's why I call my videos actually streams of consciousness, because I'm always changing, always learning, you know, reaching out to people saying, hey, you know, what's going on? Yeah, so definitely, yeah.
And I would just add to that one thing is that, like, you know, I totally, I was trying to buy a share today just to support the movement of what this symbolizes, you know, and I can't, you know, and I was like, oh, that's annoying, that's frustrating, you know, but I also I try to be a stoic on this stuff. As emotional as I want to get, I try to calm my emotions down and be stoic and be like, okay, the reality is that when I got more information, as I got more information throughout the day, you know, through sources I have, you know, in the brokerage industry and seeing interviews with Mr. Petterfee and others, and, you know, it just seems that it's the lesser of two evils. Like, what do you want? Do you want the possibility, the realistic possibility of Robinhood and a bunch of these brokers going about and screwing millions of potential customers at once? Or do you want, you know, to prove a point further? And, you know, these hedge funds that are already bankrupt, I mean, my understanding is that Melvin Capital might have already gone bankrupt, but, like, maybe there's other people on the other side of the trade still, and maybe some of those people are retailers, that people that just got tricked into being short, you know, who knows? But how far do you want to take it, you know, before it can potentially, you know, do the same thing that you're trying to get retribution on when disrupting the system entirely? You know, it's like, it's a balancing act. Like, which do you want to do? And there's no easy solution to make everyone happy. It's a tricky situation when I look at it from kind of a stoic point of view, I guess. And people have already made a ton of money on being long, you know, that's for sure. You know, it's the people that are jumping in now that want to be more long. They're upset that, you know, from a monetary point of view, not from a principal point of view, but from a monetary point of view, they're upset that they can't make more money being long more, you know, and that's, you know, it's an opportunity they're losing out on, but it's not like they're losing money by not being more long for sure. Like, you can't guarantee it's going to keep going up, but, you know, maybe it does, maybe it doesn't. But it's a tricky situation, and I can see both angles, you know, so it's tough.
Actually, actually a really great point. I didn't really think of it from that perspective. I will say that, you know, like you said, like, emotions are running high right now, and it's not easy, I suppose. Also, when you are, I suppose, immersed in the community, and I do have to say that, like I said, like you said, a lot of people are just looking at this from a monetary point of view, where they just, like, even just now, like, someone messaged me on Insta, like, you know, like, I could have bought at, you know, whatever, $2 or $3, but didn't. It's like, you know, and it was like, and I'm like, oh, dude, like, this is bigger than money. But, you know, this means a bit more. And he's just like, yeah, but, like, I'm taking the money. And I'm like, you know, like, so I get what you're saying. You know, it's kind of it's not in line with I suppose the movement, but the only thing that I would kind of come back and say to that is that I get that, you know, it possibly could have been the lesser of two evils, but, you know, at the end of the day, it should be a free market, and yes, you know, there will be hurt on some sides, like you said, like Melvin Capital came out saying that they're bankrupt, you know, but I really find it hard to believe that it wasn't a hit job on to try and, you know, shake out, you know, the not strong hands, at least, because, you know, about an hour or two, I can't remember exactly, maybe 2 hours before pre-market, you know, we've got a piece saying that Melvin's closed out their short position, and then a couple minutes later we got Citron Andrew saying that you know, on YouTube, that they've completely closed out their position, and then the market's down a little bit. And, you know, like, I find it really hard, and a lot of other people in the community find it really hard to believe that, you know, this type of like, it isn't some type of collusion. And I'm not saying that it is. I'm just saying that it's very hard, especially with the distrust now as well. You know, it's hard to believe that this just comes out of nowhere. That they haven't doubled down. Like if you look at the short float, I think it's still up at it's up at 100%. Still, I don't know exactly what it is. I haven't looked at it for a little while now, but yeah, I suppose that's all.
Show it real time. I mean, my understanding is it's only like it's delayed by a week or 2 weeks or something. I was curious. I saw that metric out and I didn't get to the source, but I know things can be misreported easily in news. But the source of that updated short metric, I wonder what that is exactly. Do you know by any chance?
No, actually, I had it on my computer crashed before I lost. I got a little different website that I was looking for on. But what I will try and do is I'll try and find them and I'll send them through to Dave on Twitter, and maybe you can have a look and find something that's that I can't find. But I also wanted to take this time to say that this is nothing against the good people that there are a lot of people who are just hopping on for monetary value. Like it, of course, like at the end of the day, that is what we want. We all want financial freedom. So there's nothing inherently wrong with that. If anything, that's what investing is. So that so there's nothing wrong with it. I just think that in this situation that there are bigger things, and I don't know what is right.
Sure.
Yeah.
Awesome. Thank you, Arjun. Appreciate your thoughts.
Thank you. And I just want to say guys, your conversations and everything have really helped me and my investments and everything. So yeah, just really wanted to say that as well before hopping off.
Okay. Thanks a lot.
Thanks. Yeah.
Okay. Cool. Yeah. It's so interesting. I mean, I love just hearing different points of views, and it really, I think, widens, perspective. Yeah, I appreciate
Like, who's to say GameStop wouldn't become like the new store of value with Bitcoin? Like people buy GameStop stock up, and instead of how much Bitcoin you have, it's like, oh, this principled GameStop stock is like the new store of value. Who's this? What free markets should allow for that too? Possibility. I mean, but apparently it's going to break the system.
Yeah. It's a tough one, man. Tough one. All right, we have Market Scraper. Welcome. How's it going? Can you hear us? Market Scraper, can you hear us? Hello. Market Scraper.
I do have a little bit of a lag.
Okay.
I can't hear.
I hear you now.
Okay, go ahead. Even if there's a lag, just continue.
I'll just start. I bought into GameStop one share yesterday to be a part of the community, and so the main question here that I have is that basically it's kind of have to do with the exit strategy. Like not for myself. I plan to hold on to my share like indefinitely, but basically the idea is when will should other investors who are in this with a significant amount of money, when should they leave? And the things that I've grabbed was last night I was in Wall Street Bets Discord, and I heard a lot of things about what they're thinking of the catalysts are going to be. And I want to understand what you guys think about these catalysts. So one catalyst was this idea that there's these naked calls that are way out in the money, and so they're so far out in the money that that they're going to be, obviously in the money tomorrow, and that this could bring up the price basically because those shares aren't currently owned. The second thing is basically what you guys think about if people are still thinking there's going to be a short squeeze on Friday or beyond even, and do you think the short squeeze happened today from when it was under 120 and then went over to over 300? And one other interesting thing that happened this morning when I went into my Robinhood account, I looked at my one share, noticed that I only could sell the share, and then psychologically I was like, okay, I pressed sell. Like, oh, should I sell my share? Because that's like the only way. I felt like a salmon in a stream going one way, and I was like, actually, I don't have to sell my share. And so I'm thankful I didn't sell my share. But what do you guys think about those two catalysts, and and for other investors in terms of what their exit plan should be? Because I'm worried that they're not gonna like significant amount of money is just going to be lost possibly.
Yeah, I would say for me, from an investing standpoint, I don't know GameStop well enough. I understand from a principal standpoint what's going on here, and there's two things. There's the investing standpoint, which I would just admit I don't know enough to know what it should be valued at or what it shouldn't be valued at, but from a principled standpoint, people should be able to hold on to their share as long as they want, shouldn't be forced to sell it. They should be allowed to buy more. That last thing is not being allowed right now, but I think at some point they will allow people to buy more. And with all these deep in the money calls expiring tomorrow, supposedly, my guess is the people on the other side, I think there's like 3 million option contracts outstanding, representing, the $300 stock representing like 30 billion gross, 15 billion people worth of people making money, 15 billion worth of people losing money. Something like that was thrown around by an interview I saw today. And the people that are on the other side of those options contracts, for every buyer, there's a seller, right? So the people on the other side are usually the market makers. And if it's already so in the money, my guess is, if they're short a deep in the money call option, then they're also long 100 shares for every call option that's deep in the money. My guess is they should be already, and that's part of the driving up the stock price is all these like Citadel or market makers having to do the gamma squeeze to buy more and more stock, to be long the equivalent amount. So if it kept going up, their P&L would still be zero at that point. That's my guess, but I don't know. What do you think, Dave? Anything?
Yeah, we have a comment. Faded Polo says, I guess this is the strategy from Wall Street Bets. You're supposed to buy a put at the top to cover, so no one gets left holding the bag. I guess that's the strategy. So I think here's my thoughts. As much as you can predict or try to assess the probabilities of something happening in the market, it's rarely ever 100%. I mean, even if it's 50%, that's actually a big odd. And I think the more you're in the market and you start to have experiences where you're so sure, but it went against you, you start to treat things a little bit more like loosely a little bit. So as much as you think it could happen, like it's all probabilities. You think, okay, 30, 40% or 20% or 50% this scenario, and you start thinking multiple scenarios, multiple probabilities. And that's where with, for example, GameStop, I don't give advice per se, but I would say, generally speaking, if it's, for the money side, you're trying to maximize that, then you don't want to, as much as the scenarios are where it could everything work out exactly like some of the strategies, that Wall Street Bets is going for, that's a possibility. There's always other possibilities. And so I wouldn't bet more than you are comfortable betting, because, that's just one of the things. And also the other thing is that's on the money side, but if you're investing or buying it on the principal side, like you want GameStop and you're going to hold for a long time, or you believe in whatever, that's another story. And I think, again, also you want to, do your due diligence, get with a valuation you're comfortable with, but also you want to not risk more than you can, that you're comfortable with. I mean, and most people will understand that, most people will understand, but then there's always some people who get carried away with what's happening, and then they get emotional and they lose their sense of rational type of thing, and they just do too much, and that's my only take. I don't know the dynamics per se, and I think even you or others would have, much more better sense on maybe some of the possible scenarios. All right.
I noticed that you guys stopped talking, so just thanks Dave, and thanks Emmet for having me on.
All right,
really appreciate it.
Okay, thanks, Market Scraper. All right, take care, bro. And we're gonna take our last guest here. It's a Dia Chu. All right, we might have some lag here, so just go ahead and just share what's on your mind.
Yeah, sure, no problem. First of all, thanks to both of you guys. Big fans. I think what you're doing is great, getting information out there and really teaching people about thinking about things in a deeper way, right? So I got to say, I've been thinking about some of these things too for a couple of years. I actually quit my previous job about 5 years ago. Ended up porting my whole 401k into an IRA and figured, let's give it a shot, right? And so I've also been thinking about a lot of things you guys have been thinking about and continue to think about, which is like, is there a framework that you could apply, in a more consistent way? And, leave it to Elon. You guys probably saw his tweet earlier today, but he says, he basically summed it up in like one sentence. He's like, buy and hold companies that make goods and produce services you love. And that really struck me because, I've been kind of thinking about different variables and stuff, but like the two that I've kind of keyed into are like quality and intent. And quality meaning like not just product quality, but I think the thing that Elon gets like intrinsically is like his products are kind of like communicating to his customers. He says it all the time. He's basically saying like his goal in life is to increase happiness, to maximize happiness. And then the second thing that stands out to me about Elon is like, his intent is like off the map because he's sitting on $300 billion. He's not going to buy he doesn't even own a house. And his whole intention is to get everybody to Mars, right? And so, I don't know, he's like this outlier that kind of exemplifies those kind of variables. And maybe this is like a huge case of confirmation bias, but like these are the things that I kind of like, I'm trying to kind of see if that applies in other cases. Even GameStop, you guys have talked about how sometimes the stock in the company gets decoupled. And I think this is one of those cases where it's GameStop, the stock actually has a pretty high, maybe it's not quality in terms of like product quality, but like people really resonate with the idea because it's become like a symbol almost. And then if you think about intent, it's probably like, there's probably some people who are just trying to make a buck and stuff like that. But more so, there's people that, like if you look on Wall Street Bets, most of the guys don't even care if it goes to zero. They just want to make a point. And so it's really interesting. I don't know. So I think I'd love to hear your guys' thoughts. I've been trying to, again, like poke holes in it and think about it from every direction. But again, could be a huge case of confirmation bias.
Emmet?
Yeah, I would say that's all really good analysis. And I think looking for those outliers, and GameStop is certainly an outlier in the market right now with what it's doing. And, this whole principled thing, I think is kind of new. You saw a little bit of it with Tesla maybe, but, and there's probably others you see a little bit of it from time to time. But I think GameStop, it just to me seems like maybe there's more there than just being like a stock reflecting the underlying revenue of the company at this point, right? It's a bunch of people believing in this movement and they're buying the stock regardless. And I bet some percentage of these people, they're planning to never sell it. They're just throwing money into it. Like I was going to do today. I was going to buy one share though, but not, maybe there's people buying a lot more that are like, I'm just going to put X $1,000 into GameStop just because I support the movement and just let it go, and then maybe it just gets so high and people, maybe it just flabbergasts so many people on Wall Street that eventually, the media and the narrative changes where it's like, wow, GameStop is Bitcoin 2.0, and maybe the board of GameStop gets on board and says, we're never going to issue new shares. These are the shares that will always be there. So we trust, all of our holders to let this be Bitcoin 2.0 or something. And it's like, Bitcoin's the gold and GameStop stock is the silver digital store of value or something. I can see that narrative playing out. In reality, that would be crazy. I think that would be cool. It would be ironic and funny, but it would be so cool. I don't know. It'd be interesting if that happens.
Yeah. So I'll take the question from a different angle on kind of Elon's view on product and researching a company and kind of what's a framework to find, let's say, a great company or product. And I always have like different ideas or different thoughts. So this is the thing. I don't think there's one angle. It's always like so many angles. And that's the great thing about investing, but also the task of really understanding something, which is so difficult. But I think and here's one just out of the blocks, crazy angle. I think Elon Musk and Tesla and SpaceX, like they present a super fascinating case where if you can dive into Elon and watch every single one of his interviews that he's ever done in his entire life. And really dive into his thinking and his mentality, which, actually quite a few people have. Mm-hmm. What you do is when you research another company, I'm not going to completely suggest this because I don't think this is the best way, but you could just start with just watching the CEO of this new company. Just watch as many interviews as you can. And this works only if the CEO has enough interviews, but just watch a ton of the CEO interviews. And what you're naturally going to do is you're going to compare their thinking to Elon. It's just gonna be natural, and that's the standard in your brain of Elon's thinking and how he views companies and products and competition and innovation and efficiency and all this stuff. And so you're gonna now look at this new CEO and evaluate this new CEO, and you're gonna see their flaws. You're gonna see, they've got some issues with this, or they're strong in this way or this way. And by doing that, my hunch is that just doing that, you will be better off than 95% of most investors out there. Just that one act of having this kind of standard of Elon that you're able to evaluate, the thinking of other CEOs and other management from. But yeah, I mean, stuff like that, I don't know who talks about this stuff, like as a way to hack the investment, game. But that's the thing. I think there needs to be ways to hack it. You need a way to hack it. I mean, yeah. So anyways, that's kind of, I'll kind of leave it at that as just one kind of tip or one thought that, comes across my mind. Yeah.
Awesome. Yeah. Thanks, guys. And, I agree too. I think there is something happening, with everybody getting networked up and sharing information. Like, the folks on the front line aren't the investors anymore. They're the people just going out there buying the products and just sharing, like, what an awesome product this is. And then it spreads, and none of the old school investors are on these forums actually hearing that news. So I totally think that, retail investors have an edge, going forward, especially for good products. But appreciate your thoughts. And again, thanks for what you guys are doing.
Awesome, man. Yeah, appreciate it. If you guys have any awesome products that you guys are floored by, just hit me up, DM me. My DM's like, I don't read all of them exactly, but I try when I have time to go through them. And so I appreciate that. And definitely, I think it's a community effort. Leave comments. And in a lot of ways, it's not just, I'm saying, hit me up, like share with the community what you find. And you'd be surprised if you start a Twitter account and you just start sharing some ideas and stuff. If it's valuable, sometimes it rises to the top, but sometimes it's like you need something to happen. Maybe someone needs to retweet your tweet or something, or something. Yeah.
You gotta get invited on Dave Lee's podcast interview.
Yeah, and that's the thing. If I find someone who I'm like, hey, there's some depth to this, Yeah. It's I love that stuff. I'm always looking for people. But anyways, thanks for chatting. See you around.
Great chatting, Dave. Okay.
And right. Emmet, thanks for joining us. Appreciate just the time in the evening spent with everybody here.
One thing I wanted to say real quick is about Interactive Brokers. The founder, he's a very special guy. He's done, I don't know how many people know the history, but he's done a ton of incredible things in the market, and his story is incredible. And in that company, he owns, 75% of the shares, and he's still like heavy-handed in decision making. And he's comparable in many ways to Elon, in my view, in how he runs the company, and how, from his perspective, everything, he can make things happen quick, and people in the company respect him so much. Like when he says something, everyone jumps at one. I've worked at other companies, and it's not the same. When you have a small company with one super well-respected founder who's also one of the wealthiest people in the world and built the business basically from scratch. It's just an interesting dynamic, and he's very good at being, I think, forming this business he's formed and being the broker. I'm not so sure he's an investor. I'm not so sure he's been on the right side of Tesla or other high growth names in the past. He's great at making markets and as an options market maker in the past and building an electronic brokerage firm and technology for that. But in terms of actually picking investments, when you hear him talk about GameStop being overvalued or not worth this, I kind of disregard that talk from him when he's talking about investing value, but that I just want to say it because I know a lot of people are offended by him saying GameStop is overvalued or whatever, as many people have. Because no one who the market should judge ultimately the value. So
interactive brokers. I think also people need to understand his background where he is, like he sees his brokerage, he sees the clearinghouses, he sees the system, and he does, it feels, even as an outsider, it feels he does have a bent to be cautious. And I remember, when was this, 2017 or 16? I remember there was a time where interactive brokers, they raised the margin requirements, and it felt like it was kind of a bit too cautious. It was jumping the gun a bit too early. And I looked at that, I'm like, and it did feel like the CEO did have he's very hands-on and it feels like at times there is some times where he does, try to err in the area of caution, and I think combine that together with this whole maybe not understanding the fuller story of, let's say, GameStop and the movement,
or Tesla, even.
Tesla. It's not. It's just a stock symbol, and and the numbers. It's more of a numbers game, from his perspective, and he errs on the side of caution. And so, but it's interesting. I think it's worthwhile to look into the whole, clearinghouse, mechanisms. Yeah, exactly. To understand there are things, out there, and that's something that I've been picking up and learning and chatting with people too. So it's
a whole other world. Yeah. And, it's not a fun world. I've known people in that world and I've dived into it a little bit when I was at UBS years ago, and it's not a fun job to be in the middle of that world, to be honest. But when you are, that stuff backwards and forwards and understand those mechanics pretty well, probably.
Yeah. All right, Emmet, take care. And everybody, thanks for joining the live stream, and we shall see you again. All right, see you guys.
All right, great. See you.